Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I'd like to say Happy Father's Day to everyone. Thought this was a nice fitting image for those of us who actively follow the market into technical analysis and our traders. Again, Happy Father's Day to everyone. Again, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 22 years ago in 2003 to provide the best technical analysis and mechanical trading systems on the planet. If you haven't subscribed to us, I highly suggest doing so, or at least sign up for our free newsletter. As you can see here, one of our subscribers, you can see on our testimonials, been here since 2009. Very humbling to me. Again, it is Father's Day. It is Sunday, it's actually June 15th, but I'm recording this very late Saturday on June 14th. And this is our extensive technical analysis review of the markets. This is our backend recorder for our website subscription service, which I'm going to go ahead and get started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, hope everyone has had a nice weekend so far, and happy Father's Day to all the fathers out there, myself included, and most of you. Very special day. Anyway, again, hope all of you guys are having a nice weekend. This is my comprehensive weekend review. And if you're new to Breakpoint Trades, these newsletters are very comprehensive. They're not for the short attention span, ADHD, TikTokers out there that can't focus for more than a minute. This is for those of you who into technical analysis really want to get into the weeds. This weekend newsletter, you can see it's divided into 8 major sections. First off, we'll cover last weekend's action in the market, look at various things and news items. I'm going to make some discussions on our various mechanical systems. Our high-performance KISS systems have done exceptionally well in this environment. We're going to then review the major indexes from a top-down approach, monthly, weekly, daily, intraday. Then we're going to look at the bond market and 10-year Treasury yield, high-yield corporate bonds. We're going to examine select sector charts. We'll look at some important stock market indicators. We'll look at commodities, crude oil, natural gas, copper, uranium, coffee, you name it. We're going to look at currencies, US dollar, crypto, Bitcoin, Ethereum, precious metals, gold, silver, platinum, palladium, GDX, mining stocks. Finally, I'm going to go over some trade ideas. Given the environment, guys, I'm not going to add any new ideas this week, but I'm going to go over some recent ideas. Okay, again, everyone knows about the Mideast, Iran, Israeli situation, so I'm not going to go way into that, but clearly affecting the markets. Came in late last week. Obviously, this is a very fluid situation. Hopefully, it resolves soon and doesn't turn into something much more serious. And again, we pray for safety for anyone who's living over there and impacted directly from this. Currently, weekend futures. Again, these are a guess, but these are betting futures. They're not actual futures, but anyway, they're indicating right now about a 0.5% decline potentially on the futures. Again, we'll see where they open on Sunday night. And as you'd expect, they also trade gold. That's trading up as well. Not surprising. Okay. Again, one thing I'll say is regarding the Mideast situation, quite honestly, it's crazy how charts and news align. Okay. You know, what I mean by this is the markets were already very stretched. We were looking for a pullback. You know, the RSI, MACD, there was RSI MACD divergence on both the daily and intraday charts of the S&P 500 and NASDAQ. They were near major resistance. We had 5 wave patterns with divergence. Everything was set up for a technical pullback in the market. Then magically you get the Mideast news situation that was the catalyst for that pullback. Okay. After my nearly 30 years of doing technical analysis, what I've observed hundreds of times is that generally I'll see things develop in the charts that is saying, hey, there's a big inflection coming here. And then it's almost like they predict something is coming. And then, you know, it's almost like the charts are psychic. And then, boom, you get some kind of news. You know, the charts are saying, hey, we're overbought. We're ready for a pullback. And then you get this news. It's just uncanny how that works. Okay. Again, after looking at the index charts, We've been looking for a pullback, as I said. One of the counts we had was a nested 1-2-1-2, and we were looking for some sort of pullback as a major wave 4 pullback, which is obviously occurring now. Okay, so I'm favoring this as a pullback of some sort, wave 4. The question is, how deep will it be? Will it form a zigzag or some sort of coil, which would be a more shallow pullback? But once it's done, I'm then looking for a move to new all-time highs again. Platinum and palladium, as you know, I've been covering that extensively for the last couple months. I've gave both my technical reasons why it is a very good long-term hold and the fundamental reasons because of the supply and demand imbalance. And it's had a hell of a move even since I did my last video. Short term, they're quite extended. They made it due for some good consolidation here. But remember, this is a long-term play. So long pullbacks, consolidations are long-term buying opportunities. Okay, if you haven't watched my video on platinum and palladium, I suggest you do so. I'll link it in the video because, again, those are long-term holds. Commodities, crude oil is obviously rallying on the Mideast situation, as well as energy stocks. Gold and silver doing well, especially gold. I mean, breaking out of a coil pattern here. Maybe it's going to make another high again. Natural gas is in a coil pattern. That could be moving here too with that Mideast situation. And keep an eye on the US dollar here as well. It's nearing some major supports, so we'll see if it can find support there. World markets have outperformed the US markets, and I expect them to continue to do so in the long term. EFA, EEM I've been showing. They're a bit extended as well, though. As far as news items this week, obviously front and center, Iran, Israeli situation. But other economic news, FOMC on Wednesday is a big one. Okay, let's get started. So first chart below, item number 2. Again, I'll cover these charts below, but what I'm saying here, like I said, before Israel attacked Iran, the market was looking for a pullback. Here's a daily chart of the triple Qs on the left. You know, you can see that double top we had there in February, and then we had that big ABC decline into April, where we bottomed on April 7th. And then that rally up, you can see a very clear 5-wave uptrend. Wave 1, 2, 3, 4, 5. And you see a wedge-like pattern up near the all-time highs, resistance with RSI negative divergence, MACD negative divergence. So clearly when you get 5 waves up with divergence and you're near resistance, you know, you're going to get a pullback. And then the 30-minute chart here, you can see the perfect 1, 2, 3, 4, 5 rising wedge wave pattern and pulling back. So you can see, guys, everything was set up in the market for a pullback before the news came. Then you get the news and then you get a pullback. So that's why I'm saying is that it's kind of uncanny how things line up in the chart first and then you get the news. You know, is it the dog wagging the tail or the tail wagging the dog? Interesting. Next. Image number 3. So here's the table from our high performance KISS systems. And like I said, they've done very exceptional in this environment, especially since that April 7th low. Again, I just sorted this by percentage high from high to low, but you can see all these. QLD, 78-minute system, is up 39.5%. NVIDIA, it's up 34%. Got a couple NVIDIA systems. UPRO, SMH, Microsoft, SSO, 60-minute. That's the 2X leverage ETF for S&Ps, up 19.8%. AGQ, that's silver. It's a leverage play, up 16.25%. SLV, silver 1X. GDX, gold miners. India, Palantir, you know, you name it. The KISS systems have done exceptional. If you're not in these or you don't have a subscription to this, definitely consider taking it. And if you need help, you want some guidance, write into support. Myself or Rick Kwan will help you out. It's a valuable resource and it's only going to get better over time. Next, let's get back to the general market at hand. So item number 4 shows the index sector table, what transpired last week. So again, obviously we had that big sell-off on Friday, and you can see for the week the major indexes were down, with the Dow down 1.3%, Russell down 1.4%, and the S&P down about 0.4%, while the NASDAQ down 0.6%. As far as the 21 market sectors we follow, slightly more sectors were down than were up, and you can see clearly the strength in the energy area. XLE, oil services, not surprising, with crude oil rallying here, and especially late in the week. The weakest sector here was retail, then followed by financials, banks, and one of the strongest sectors was health drugs. Currency-wise, U.S. dollar still lost 1% for the week. It took out its recent low, but we are looking for a potential positive divergence on the daily, and we are nearing some weekly and monthly support, so we'll see if that can hold. Cryptocurrencies, they bounced early in the week, but they're pulling back. I'll discuss that below. Ethereum, which was trying to break out, and it did close up for the week, pulled back late in the week with that situation. Commodities, the DBC, that's the commodity ETF index, up 4.6%, largely due to the crude oil, which was up 12.4%. Again, the DBC has a big weighting for energy. I think it's 30 or 40%. Natural gas down 4.8%, but it is coiling. I'm looking for a break on that coil soon. Copper down 1.5%. Uranium up 7.4%. That's a big move. It's been on fire. It's in a bull market. I'll discuss that as well. The ag's been all pulling back here, as you can see. Precious metals all up. Gold up 3.6% for the week. Closed at 3,430. Silver up 0.86%. Platinum up 4.7%. It's off the highs, but nice move there. GDX, the miners, up 5.5%. Bond market, we did see a pullback in the 10-year, 30-year Treasury yield for the week. Helped the markets. Next, item number 5 shows the economic news calendar. Again, I'm not going to go through all these guys, like I said. The big one here is the FOMC on Wednesday. Initial jobless claims on Thursday. But again, obviously front and center is the Middle East situation. So let's go and jump to the first section of the newsletter, which is the index analysis. So chart number 6, here's a weekly chart of the Dow. Again, as you know, we had that double top there in February, that big waterfall sell-off into the April 7th low, which magically found support at this horizontal support, which was previous resistance, turned support, rallied up. Now you can see last week we tagged that supply zone where we're pulling back logically from. Next, let's move on to the S&P 500 chart. So we'll start with the bigger picture. So chart number 7, here's the monthly chart of the S&P going back to the 90s. Again, this is kind of like, this is showing your secular bull and bear markets. And no changes here. We're still in the secular bull market. From the March 2009 low, you can draw a very obvious uptrend channel with symmetrical lines here. No changes here. Remember the 14 stochastic, I always talk about this. It does a very good job about keeping you in long-term uptrend cycles whenever it stays above 50%. When it falls below 50%, that's bear markets. Would have got you out in January 2008 if you followed that. Would have got you out in late 2000, kept you out of the tech bubble 2-year bear market. So again, it briefly fell below 50% there in 2022 in that bear market, then came right back. Again, there's no changes here on the long-term structure at this time. Just again, this is kind of like a paint dry system. It's not for traders like myself, but it's good for folks, maybe retirees or folks who want to basically position into the market, strategically position, but they want to get out for bear markets. They don't want to ride that down. That's what it's good for. Next. Chart number 8, here's another monthly view of the S&P. Now this has a wave count for those of you who might be a little bit interested. So this wave count still suggests yet another push to new all-time highs and some sort of 5 of 5. Now, after that, it's going to get interesting. But again, let's go move on. Next, chart number 9, here's the daily S&P 500 KISS system. So I have 2 of them here. I've been showing both of them for a while. The top one has the better stats overall, but it still has a fairly wide stop at 56.63. Okay, and so it's a bit wider stop. The bottom one has a much tighter smart trailing stop at 58.73. Kind of comes in right around that ATR. So again, last week we had the Mark 9s on the S&P and we had a DeMark 913 combo on the Q. So not surprising to see a pullback here, again, in addition to being up near resistance, divergences, and then you had the Israeli issue come But this is our S&P KISS system. The beauty of the KISS systems are they keep you in uptrends, they're long only, and they give you that stop protection so you never have to go through those big declines. You can see how the S&P here up at the top, kept you out of a good portion of that decline and then got right back in. We have intraday KISS systems, which get back in much, much sooner, such as our 78-minute version or our 60-minute version. They went back long around April 7th. I'm not showing those tonight, but so if you want a more tighter entries, that's where the high performance KISS systems come from. Next, image number 10. So here's the 4 time frames of these custom indicators we look at. We have moving average ribbons, ATRs, the cycles. So again, you can see on the daily, the upper left, we had the DeMark 9. We were getting a little divergent here. We're still above the ATR. We're above the ATR in most of these time frames, except for the 78-minute. You can see at 78-minute, we had a DeMark 9-13 combo. We had a DeMark 9 and 130 minutes. So again, logical pullback from that, and then we had the news catalyst. Next, moving back to the standard chart. So chart 11, here's the daily S&P. Again, I already showed this basically on the Qs initially, but you can see, from February, that big decline into the April 7th lows, and you can clearly see this 5-wave uptrend. Now, if you want to break it out, it could be a nested 1-2, 1-2, where you have a larger degree wave 1, 2, then a smaller degree 1, 2, 3, 4, 5. Okay. And if this is correct, that'd be 5 of the major 3. So we were given the RSI divergence, given the MACD divergence, we were looking for a pullback, and then you get the news catalyst with the Mideast situation. Now we pull back. First supports this 20 MA, but again, looking at this as a wave 4. So we'll see. I mean, this wave 4 could still come down quite a bit deeper. There is an open gap down here that would be, pretty nice pullback, but that would not break the wave 4. It's definitely allowed. So we could have a deeper wave 4 pullback, or we could have more of a shallow coil. We'll see. But once complete, then we're looking at a rally to new all-time highs in a wave 5. Okay, so ultimately this pullback will be a buying opportunity, but just given how everything goes, this may need to unfold for a bit. Next, chart 12. Here's a zoomed in daily view. We've been showing this parallel uptrend line channel, and I talked about this middle channel line last week. Obviously we broke that on Friday. So one obvious target would be the channel line. Now if you break that, then you have this very obvious open gap from early May, and these gaps like to be filled on the indexes. Next, chart 13. Here's the half-day chart of the S&P. Again, shows you the same thing. One thing I was talking about a couple weeks ago was this coil, which obviously broke to the upside. And again, we didn't get up to the supply up here. We had that RSI divergence building, really obvious MACD divergence, and now we're pulling back. Next, chart 14. Here's the 2-hour view. I was showing this channel last week. Well, obviously we broke the channel on Friday. And again, if we have a nice pullback, there's a big open gap down here that could be a magnet over time. Next, chart 15. Here's SPXU, 60-minute view. That's the triple inverse ETF for the S&P. So this is something I was showing last week. I was showing on Monday and Wednesday to our subscribers as a hedge on the market. You had a very obvious 5 rising or falling wedge. You had a MACD divergence. So everything was set up here. And I bought a little bit inside the wedge, but again, I should have been much more aggressive, quite honestly. Anyway, gapped out of the wedge, and then I said, guys, watch for a pullback, a back test of the wedge. That's your very objective long if you didn't buy inside the wedge. And I said, then you could put a tight stop right there, and that's a good area. Then it moved up, and now we'll see. There's a little supply zone here, and there's another one up here, so we'll see how far this goes. But the wedge here was clearly set up for a trigger. Next, chart 16. Here's a 30-minute view of the S&P. You can see also had a rising wedge here. You had a 5-wave structure. So everything was set up. I added fibs here. So these could be targets as well to the downside. 38% fib, 59.50 roughly, 50% fib, 59.13, 61.8 fib, 58, 78, 59, 58.80 roughly. So those are potential targets as well to the downside, unless we fill this gap down here from early May. Next, moving on to the NASDAQ, chart number 17. Here's the Triple Q's NASDAQ KISS system, high performance. Again, you can see the DeMark 913 combo. Again, DeMark is heavily followed by institutions. I do some professional consulting, and Morgan Stanley and these guys use DeMark in their Bloomberg terminals. I mean, I know some of these guys, they won't make a trade without looking at DeMark. So it is followed. So DeMark 913 combo, a lot of pros look at that. Starting to pull back now. Maybe first support would be the ATR. Otherwise, again, the KISS system here, it's got a nice tight smart trailing stop at 495 and a quarter, nicely above that entry. Again, that's the beauty of the KISS system. You can see it got out there in basically late February. Never going to get out at the highs, okay, but that's fine. Avoided a nice good 60% of that decline, then got back in lower than it got out, and it put an initial stop, then successful raised that stop and just continues to do so. Just beautiful how that works. Next, moving back to the standard chart, chart number 18. Here's the daily triple Qs, which I already discussed in the early part of the newsletter. Again, you had the 5-wave structure up, rising wedge near this resistance, all-time highs with the RSI MACD divergence. So everything was set up there for a pullback, and we just started. Now the first support's the 20-day. If you lose that, that opens the door for a pullback further, and maybe even this open gap over time if things really want to pull back. Chart number 19, here's a 30-minute chart. Again, you can see the nice rising wedge. Beautiful rising wedge, 5-wave structure. Okay, remember, true wedges are 5 waves. So everything was set up there. We broke the wedge, back tested it. Here's some fibs as potential targets below. Next. Chart number 20, here's a 2-hour view I was showing last week, this parallel channel. We broke that little trend line inside there. So now one target would be the channel line, and then a break in that would be the open gap. Chart number 21, here's another, this is a 60-minute view, just showing this, this showing a parallel channel. We're basically right at the channel line. Chart number 22, another 60-minute chart. This one has all the moving averages, not as clean as the others. Again, you can see the open gap below. And chart number 23, NVIDIA. That's a big one, obviously. Now, this is still unfolding. We're still ultimately looking for new all-time highs in this. You can see the wave structure here. You can see the parallel channel. So that parallel channel could be a support on a wave 4 pullback. Next. Chart number 24, Russell 2000, IWM. As you know, this is overall lag the market. You got a 5-wave decline from the November highs, unlike the S&P and Qs, which had a different structure. And they rallied, broke out of this coil, tagged their 200-day moving average, and I expected a pullback there, which we got so far. And finally, chart number 25, here's a 2-hour view of IWM. We've been showing this channel. We broke it finally late last week. You could also see the RSI broke its trend line. So now we'll see how far this decline goes. I should have added some fibs here, but again, I'll do that on Monday. And there you go for the indexes, guys. So we'll see where futures open on Sunday evening at 6 p.m. Eastern, and obviously how the cash markets open on Monday. And of course, we have to keep an eye on the news. All right, let's go ahead and move on to the next part. Let's look at the bond market. So chart number 26, here's the 10-year Treasury yield. It bounced on Friday. It still closed down for the week, but obviously we want to keep an eye on rates. And remember, we have the FOMC on Wednesday. Inflation data did come in weaker than expected last week, and so there's hope that the Fed may not have to wait as long to lower interest rates. That would obviously help the market if it did that. Next, chart number 27, here's the weekly view of the 10-year. Now, whatever it does in the short term, on the bigger picture, I'm watching this coil that's been developing for the last year and a half. So we'll see ultimately which way that breaks in the long term. And finally, chart number 28, here's the big picture view of the 10-year Treasury, going back to 1980. So again, as you know, those of you who are older, interest rates topped out in basically 1981. That was a horrible time to have to buy a house. 15-16% mortgage rates, just crazy. It's like buying a house with a credit card. And interest rates were in a secular bear market until the 2020 bottom. Then we broke out of this 35-year channel. And the point here is, guys, interest rates are now in a secular bull market. So they're not in a bear market anymore. They're in a bull market. So secular bull markets, guys, last for a long time. So don't expect rates to pull back to 0% for many, many, many years, okay? The rates are higher. That's the new normal for the long term, okay? For the next, who knows, 10 years or whatever. So again, got shelf support here around 3.25%, and resistance here at 3.5%. And chart 29, here's another view. This shows you kind of a potential wave count. You can see this coil that is developing. I'm wondering if this breaks out to the upside as in a wave 5 over time. Again, this is a monthly chart, guys. I mean, this might not break out until late this year. So I wouldn't worry about this anytime soon, just showing it as a bigger picture. The other one, chart 30, here's high yield corporate bonds. The market tends to follow this, tends to be highly correlated, and this tends to lead. And it did lead. It made a new high, all-time high first before, while the indexes did not. But we've been noticing this RSI and MACD divergence. So this also looks a bit toppy. Next, let's look at some indicators. So chart 31, here's the VIX volatility. So if you've been watching my videos or newsletters, you know I've been talking about the VIX here. I said, watch these Bollinger Bands. They're starting to pinch. A bigger move is coming. So again, everything was setting up in charts for a move. And you could see that pinch. And then, of course, the VIX spiked on Friday with the news. You could see the RSI positive divergence. The other thing that occurred on Thursday, which I wish I had seen, guys, was this correlation. So the VIX became uncorrelated with the market. And typically when you get these uncorrelated spikes, this tends to occur near market inflections. Well, this gave you an early warning on Thursday before the market dump. So definitely got to point that out in the future. Next. Now here, chart 32, here's the VVIX. This has the uncorrelation at the top. Again, you can see the uncorrelation here as well. Now, interestingly, the VVIX closed outside its upper Bollinger Bands on Friday, whereas the VIX itself did not. This is the volatility of the VIX. So this tells me we're likely to see more downside in the market, the fact that this closed outside the band. So I think we'll see the VIX close outside its bands probably on Monday. And finally, chart 33, here's the VVIX to VIX ratio. This is a very powerful chart, very good mean reversion. So when you take the ratio, whenever it closes outside the Bollinger Bands, so if it closes outside the upper bands, gives you good sell signals, closes below the lower Bollinger Bands, gives you great buy signals. Look at these signals. Okay, and sometimes they're early by a day or two, like you had there in April. The early April lows, looks like it went below the lower Bollinger Bands 2 or 3 days, but ultimately caught that low. And look, this ratio was outside its Bollinger Bands on Wednesday and Thursday last week, giving you an early warning playing out. So this is an excellent indicator to follow in the future whenever it closes outside its upper or lower bands. Okay, very powerful. All right, let's go ahead and move on. Let's look at a few sectors, guys. And because I got a lot of charts here, I'm not going to look at all the sectors this weekend. Just going to cover some of the main ones. So here's XOK Technology. It had this 5-wave structure all the way up to the all-time highs. So given the RSI, MACD divergence, logical time for a pullback. Okay. Chart 35, financials. They pulled back near the trend line I've been showing, losing their 20-day moving average last week. Now we have the 50, 200-day moving average below as potential targets or supports. Chart 36, transports. They've been overall lagging, and they lost their 200-day moving average last week, even before the news. So they have been overall weak. And chart 37, XLE Energy. So they've been uptrending before the Mideast situation, and obviously got a big spike on the Mideast situation. So this area continues to recover. Wouldn't be surprised to see this go higher as well. Some energy names I've been showing: ExxonMobil. This broke its trend line early last week. It's been a nice pop. Then you got the pop on Friday. Jabber 39, PBR. Another long we were showing early last week. You got a clean horizontal resistance here. So I pointed this out on my Wednesday newsletter right here. Then this broke out on Thursday. Then, of course, moving up on Friday with that news. And if you look at the bigger picture chart of PBR, here's the weekly view. Got this big channel going for the last 2.5 year and a half. One to watch. And as far as world markets, they've been stronger than U.S. markets. I expect them to be stronger for the long term. This is a macro play. The EEM broke out a couple weeks ago, but it's pulling back here as well, getting a little extended. This line may be a support. We'll see if that can hold. And Chart 42, EFA, another one. This, the epitome of a V move. Look at that. It broke its highs there basically in the beginning of May. Now, I've been talking about how momentum was waning. You had RSI divergence building and building, MACD divergence building. Nice pullback finally on Friday, right to the 20-day moving average. Now, if that breaks, then I'd see a further decline, maybe even test the 50-day. But again, longer term, these should outperform the S&P. And just giving an idea, here's the EEM SPY ratio. So S&P, U.S. markets have outperformed EEM, emerging markets, since 2010, 2011. But we got a buy signal here a few months ago, when this indicator crossed. So remember, guys, trends change. It was just due. I think we're due now for a change where we see the U.S. markets underperform world markets for several years at least. Next, moving on to the next part of the newsletter, commodities. So here's DBC, ETF index, various commodities, as you can see here, from, energy and gold and agriculture, metals, etc. But big move last week, up 4.6%. Overall, it's still in this weekly channel that it's been in here for nearly 3 years now. But as I say here, energy is building. The longer it stays in this consolidation pattern, the stronger the trend move will be when it finally breaks out. Remember, out of contraction comes expansion. So I'm really interested in when this breaks out. This could be one hell of a trend move. Chart 45, here's the weekly view of DBC. The monthly view, up 8.5% for the month. You can see how the moving average ribbon's really pinching, squeezing. You can see the squeeze back here. When the moving average ribbons pinch, that's when you get your big moves. That's when energy is pent up. So energy's been building. The MACD here, it's trying to recycle. It's close to crossing. So this was really set up maybe for a monster move soon. And here's the ratio chart of DBC to SPY. Clearly, S&P has outperformed commodities, but I pointed out this falling wedge basically into last year. We had an initial move up in commodities, pull back, but now it's curling up again. Next, Chart 47, here's DBC on the daily. We took out that resistance area early last week, and then, of course, popping hard late in the week and on Friday with the Mideast situation. Moving on, Chart 48, here's crude oil weekly view, up 13.3%. Now, it's still in this channel, but we'll see if we break the channel come this week. Again, that's on the Mideast situation. Clearly catalyst. Chart 49, here's the daily. Been showing this horizontal area, which was big resistance. We took that out early last week, and then, of course, off to the races. Look at that gap well above that 200-day moving average now. Chart 50, here's UNG natural gas. As I've been stating, natural gas is really consolidating hard into a coil. Now, I did see some news on the weekend about a natural gas inventory or being hit in the Middle East, so we'll see if that spikes natural gas. This is really set up. It's coiled here, so we'll see if this pops. Chart 51, DBA agriculture. It's had a heck of a run since that cup and handle I pointed out in early 2024. Last week, though, it was down 1.9%. Chart 52, uranium. This has been a powerhouse. Look at that move from the April 7th lows. And now there is divergence here a little bit, but again, divergence isn't a sell signal on its own. Really, essentially, it's been rallying, following its 9 EMA all the way up. The epitome of strength. Chart 53, here's the monthly view of uranium. Again, so far for the month, up 12.9%. One of my targets here is the supply zone, going back to 2011, basically from 40 to 45. I think that'll be achieved. I became bullish on uranium way back in late 2020 when it broke this long-term base trend line. Chart 54, URNM. Here's another uranium. This is uranium mining ETF. Again, it's been moving up nicely. Nice little look to it here. Nice kind of flagging right now. Still looks good. One of the major uranium stocks, CCJs, had a hell of a move. I talked about the cup and handle pattern, which playing out obviously. This area of the cup, that is now major support. And look at the big picture chart. Here's the monthly view of CCJ. So back in 2021, I pointed out this 5-year base, and look at the move out of that base. Again, guys, longer term, if you ever see these long-term bases, that's when you can get into a real, I hate not a swing position, but a strategic buy and hold. They used to call these Stan Weinstein basing patterns, if you've ever read that book. But hell of a move, and boy. Now, here's one I haven't talked about for a while, is coffee. Coffee up 2.1% for the week. But this 45-year chart, remember, coffee broke out of this basically in late 2024, early 2025, took out this resistance. Got extended, moving average got wide, it's coming back. But this area is now big support. Could be a buying opportunity there if it gets there. Chart 58, here's the weekly view. Again, hell of a move out of that double bottom from 2023. But right now we're having a pullback. Looks like an ABC so far, which is bullish in an uptrend. So I'm going to watch that. Here's another thing to monitor, LIT, that's Global Lithium ETF. This is a weekly chart. Look at this beautiful trend line going back to 2021. Breaking this could be a long-term hold. By the way, in my high performance KISS systems, I added lithium. I added this to this system, to our systems, LIT. So it's a 78-minute system right here. Got the stats. Again, you got to be YouTube to see this, guys. So here's the stats. The system up every year since 2018. It's up 10.8% this year already. Absolutely destroys buy and hold. Average drawdown per year is only 5%. So this system is right in the high performance section. So if you want to be alerted to that, make sure to sign up to Breakpoint Trades and make that a favorite. Next, moving to Bitcoin, chart 60, Bitcoin, weekly view. This is the weekly view. So again, we're still in this long-term 5-wave structure, but we are in the final 5th wave. Once that 5th wave ends, then, then we could see a heck of a correction, but otherwise that's still intact. Chart 61, here's Bitcoin on the daily. So we had a nice pullback to the 50-day moving average. We expected a bounce there, which we got. Now I'm wondering if this is kind of an A, B, C pattern. We'll see how this develops. Chart 62, Ethereum. Ethereum pulled back last week off that area. So now we'll see if it can hold this structure. If it can ultimately hold this structure rally up, then I think Ethereum does interest me for a long, but I want to see it hold this area and 50-day moving average, obviously the rising 50-day. Next, chart 63, US dollar, weekly view down 1% for the week. Notice last week we tagged the top of that demand zone and bounced for now. We do have some RSI divergence, so there is some hope we can find a little support around this area. You can see how we stalled at the supply zone basically beginning of the year. Chart 64, here's the monthly view. So nice view. You had that head and shoulder pattern basically in late 2011, or 2001, then we had the big sell-off into the 2008 lows. And since then, you can see this uptrend channel. We marked that as a 5-wave uptrend, and we sold off from there. But right now, the point I'm making is this uptrend line going back to the 2011 lows is nearing, so this is a big support down there. We'll see if the dollar can be defended in there. And finally, chart 65, here's the daily view of the dollar. Again, it's been a heck of a sell-off here. Gold has benefited extensively, but we do have some RS or MACD divergence, positive divergence potentially in here. So the dollar, and given the supports on the weekly and the monthly, there is a possibility we could see the dollar bottoming soon potentially. So definitely something to keep an eye on. Now, let's look at gold, which is one of my favorite things. Here's gold on the weekly, up 3.6%. So we had that big move up to 3,500. We've been in this parabolic uptrend. You can see how, gold had this beautiful base that had formed. Again, from contraction comes expansion. All right. Now, I was thinking that 3,500 would hold for a while, but it's possible we could rally to a new high still, perhaps. So we'll see. We'll see what happens early this week. If it's going to happen, I think it'll happen this week. Again, it's news, guys. If clearly it's getting a bounce with the Iranian-Israeli situation, but if that's resolved quickly, then we could see gold come down and the dollar bounce. So we'll see, but still in this parabolic uptrend. Another thing to watch longer term is the RSI trend line here. Next, chart 67. Here's another weekly view of gold again. So I've been showing this wave 5 here. Again, if we make a new high, then wave 5 would be shifted over to here. Again, long term, it's in a super bull market. If you've been following Breakpoint trades, early last year, 2024, I was calling for highs of 3,000 or higher, and obviously I was correct. Chart 68, here's the daily view of gold. Last week I pointed out this coil pattern. You can see finally on Friday started breaking it. Now we'll see if we rally to a new all-time high or not. Definitely could easily do that. MACD's curled up. And again, we know this is in a bull market, and we'll see, guys. Chart 69, here's the big picture view of gold going back to the 90s. You can see, the start of the long-term uptrend from the 2011 or 2001 bottom. Man, heck of a move. And here's the monthly view of gold. Okay. Overall, I'm viewing this as some sort of major wave 3. When we do get a big correction, I'm going to view it as a wave 4, but then we should get another new rally in a 5. So who knows where gold will end up in the long term? 5,000, 8,000, 10,000, who knows? Next, silver, chart 71, silver, up 0.89% for the week. You can see the previous week took out that trend line resistance. Chart 72, here's the daily. Again, it was in this 8-month consolidation, finally broke out. Pulled back a little bit last week, but again, long term, I think silver still has a long way to go up. So chart 73, here's the monthly view of silver. So last year, February, I was pointing out that coil pattern, which obviously gave a nice trade. It's been stuck in this supply zone. Now, if we can break through here, I'm looking for silver to eventually test its all-time highs. And chart 74, here's silver going back to 1970s. So back in 1980, you had the Hunt brothers. They tried to corner the market. It's kind of interesting. It's like that movie Trading Places where the what were those guys' name? I can't think of it. The Dukes, right? The Dukes were trying to corner the frozen orange juice market. So I wondered if they got that idea from this. Hunt brothers tried to corner the silver market. It didn't work for them. It topped out, and boom. Well, then silver took to 2011 where it hit $50 again. Then we've had a long consolidation. I think silver is going to test that area again. I think then eventually it's going to break it. Okay. That's my big thoughts, or bigger picture view thoughts. Next, chart 75, platinum monthly view up 15%. Again, it's off those highs, but we broke out of this big, beautiful coil, as Trump would say. He loves the word beautiful and big. Anyway, platinum, as you know, if you watch my newsletter, this is a long-term hold now. I think this could go up into the I think this is a nice long-term hold, guys. Short-term, it's a bit extended, but this should go much higher over time. Chart 76, platinum on the weekly. Again, up but off those highs. Again, beautiful breakout from this coil pattern, so hopefully you caught that a few weeks back. Chart 77, here's the daily view. Again, like I said, it got very extended. I mean, after breaking the coil, you had one gap, then you had another gap here, a gap here, a gap here, a gap here. Outside the Bollinger Bands, this was too extended. So this may need to work off for a bit. But again, good consolidations are long-term buying opportunities. Chart 78, SPPP. This is another favorite ETF of mine. That's 50% platinum and palladium. Hell of a move from here as well. Been showing this, but this may need to consolidate too. Here's the monthly or weekly view. Look at this beautiful base. Remember we talked about the bases. So nice long term. You can see it tagged its 200-week moving average, pulling back from there. But again, pullbacks are buying opportunities. Look at that volume. Look at your moving average ribbon pinching and curling up. Looks beautiful. And here's the daily chart. You had a cup and handle, as I pointed out. Heck of a move. Hope you guys caught these puppies. Been very good trades. Back to gold. Let's look at the gold miners. GDX rallying again, making a minor new high. We had that last ABC pullback in May, which was a buying opportunity. Here's some individual names I've been showing. Newmont, I showed it as an ABC bullish pattern back in early May. Played out, took out those recent highs. In fact, it looks like a big cup and handle here, doesn't it? Another one, chart 83, BVN. I pointed out the coil pattern. Broke out. It's been a heck of a trade here, as you can see. Hope you guys caught that as well. There we go. Chart 84, RGLD, another gold pattern. I pointed out the ABC pullback in May was a good buying opportunity. That said, look at this coil forming. Looks really good to me. So keep an eye on this puppy. Chart 85, SA. Seabridge, another gold stock, was a nice base pattern, gave a great trade as you can see. Some others, chart 86, SILJ, that's the silver junior miner ETF. This is the weekly chart. I pointed out this big cup and handle pattern, which broke out the previous week. All right, guys, going to move to some final part of the newsletter, some recent trade ideas. I'm not adding anything new. So CRML was one we put out on Thursday. So if you've been a subscriber, this was the big winner on Friday, up 26%. Was a beautiful little coil pattern here. Again, we put this out to our subscribers on Thursday. Look at that pop. Excellent trade, and that was a big down market on Friday. So, gave a great opportunity. Some others, chart 88, SDOT was one of mine from Wednesday. Look at this move, big breakout, consolidation, big breakout move on Friday, up 22%. Chart 89, Oklo was a cup and handle I showed over a week ago. Played out for a nice pop. Now it's pulling back. Maybe it finds support here. It could be another buying opportunity, but this played out. Chart 90, DNA was a nice coil we had. It popped out. Obviously pulling back a little bit with the market. But this broken trend line is now support on a pullback. Chart 91, ASTS. Look at this beauty. Falling wedge we had. And couple weeks ago in early June, and look at that puppy. Look at the volume patterns. Excellent trade. Chart 92, MEOH was another little one we had recently. Broke here and popping here. Look at the volume patterns. Chart 93, TNGX, another beauty out of this base. Look at this beautiful move, as Trump would say. I need to quit saying that. Sorry about that, guys. It's getting late here. Chart 94, Tesla. We talked about the demand zone where it bounced right off of. Now, last week it stalled a little supply zone. Another one, AZ Smart Carts, one we have a long-term investment in. We held a webinar with the company back here in October 2024 when it was around $2.70. So since then, it's been about a 400% move. Congrats if you bought and held it like we did. This is a big support area. Got it consolidated nicely here. Now, this company is based in Israel, so I do have a little concern about that if the war intensifies, but, otherwise we like the company. Jabber 96 QTRX, another little stock we had, popped nicely last week, pulling back on light volume. By the way, this would be an objective area on that back test. All right, guys, that does it again. Happy Father's Day to all the fathers out there. And thank you all for the subscribers. Those of you who subscribe to Breakpoint Trades, we've been here since 2003. I have subscribers who've actually been here since the beginning, who've been here for 15 years, 10 years. It's really humbling. It's kind of like a family. So again, if you're not a subscriber, I'd really appreciate you checking us out. It helps us out. We're not a big firm. We don't really advertise. We do post some YouTube videos, but a lot of our subscribers come from word of mouth. And anyway, guys, that does it. Again, enjoy your Sunday. I'm going to go to bed here. We'll see how futures open on Sunday evening. Take care.